Aloha and welcome to Java. Thank you all kindly for joining me again. This is for Sunday, the 28th of April, 2024. Want to go over some things mostly for the coming week and a little bit about what happened last week. There is a lot to cover, so let's get right into it. First off, we've got our MMRI currently sitting 307.6. We are still in extreme risk territory. We've also got the fear greed index is edging more towards the greed again, still in fear area. So what does this mean basically looking forward? We can expect a lot of volatility. Now, I'll go over this every morning prior to the market open, but we've got the Fed on deck. It's a huge week, big news, big earnings, and we will watch this daily and adjust as this continues. So we've got Wall Street closed higher, led by tech. It was driven by strong earnings from Alphabet, which is Google, and Microsoft. So sent NASDAQ higher. However, stocks did have last week a significant decline in response to the GDP. April 25th was the worst day for the Dow in 14 months. So, as I said, despite that rough day and a few concerning economic reports, stocks recovered and ended the week higher than when they started. So, with this couple of things we are watching the yen still. It has weakened past the 156 points. So, this is a level that it has not been at since 1990. So, what does this mean potentially? If they step in to strengthen the yen, means it could basically sell off what they need to kind of strengthen their yen again. That would put a hit on the US dollar. So, with this, we've got another story about Americans. They don't understand inflation, and they're talking about how it affects the money. Well, it depreciates it. And I would venture to bet it's not Americans, it's a global issue that they don't understand. It's not money, it's currency. And that's first mistake. There is a very definite difference between the two. So we've got this handsome gentleman we are expecting to speak this week on Wednesday. So with this going into our calendar, we've got quite a few things going on this week in the United States. All eyes will be on the Fed's interest rate decision on Wednesday. So I think it's going to be a nothing burger because I think they realize anything aberrant will throw the stock market into a shock, but we'll see. So following this, we'll also be watching the labor market report on Friday. So we're also getting numbers from ISM manufacturing, servicing PMIs, as well as more labor data. So we'll be watching either also foreign trade figures, factory orders, and also we've got earnings season. So this is kind of at a peak. We've also got quite a few large companies reporting. So you can see we've got the likes of Amazon, AMD, Starbucks. We've also got MicroStrategy coming out with theirs, MasterCard, Pfizer on the health side. We've got, Coinbase and Apple are huge ones that we'll be watching, as well as some energy companies throughout the week. So, with that, let's go into what's going on underlying on some other, I think, large stories, starting with small banks. So, it's very likely you heard about this, but United States regulators seized another small bank, Republic First. And the important part here, I think, is that they have chosen to sell it to Fulton Bank. And the point here is when they're seizing these weak banks, and they have weakened them by design, they've already chosen the ones that will go out of business. And by choosing the ones that they get to sell to, they are directing this whole basically spiraling bank failure that is coming. So please be aware of this. If you still have your money in the bank, anything more than you absolutely need, I urge you to get it out now. So, with that, I also want to say there is a huge divergence between seeing a bank account that has a balance online and having physical US dollars in your hand are not the same. So, I encourage holding physical US dollars for what is to come. Engage your purchasing power, but get your money out of the digital bank. So eventually US dollars will be scrapped. But in the meantime, and I'll go over this in a bit, there's going to be a period in time they become very valuable and you will need them. So with that, we've got an adjoining story. Doesn't seem like it is, but we've got Bitcoin falling in price after DTCC rules out collateral for Bitcoin-linked ETFs. So the banks, they did not have reserve requirements or enough to where they had to have dollars on hand to cover if anyone had those requests. Well, now they're doing the same thing. With exchange traded funds, they don't have to hold the Bitcoin behind them any longer. So, what does this mean? Basically, in my opinion, ETFs are trash. So, I would rather hold Bitcoin, keep them in a wallet offline. I can go into that more later, but let's move on. There's quite a bit to cover. So, what's going on? We are facing stagflation. So, this is a weakening economy going into increasing interest rates. So, saying it's going to bite consumers because basically they'll have less money facing higher prices. So, this example right here, I'm not a smoker, but it was significant, so I used it. In Minneapolis, smokers will pay some of the highest cigarette prices in the United States with a $15 per pack minimum. So, last time I saw smoking cigarette prices was quite a bit less than that. So, we're going to watch this bleed over into all products. So, what does this boil down to? One word: inflation. If the market doesn't see signs that inflation is contained, then there's no reason yields won't keep pushing higher. So, again, that supports the stagflation. So, let's go into what's going on with Ford and what could happen on the other side to break this out of this once this is over. Ford's electric vehicle division reported shocking increase in loss first quarter. They are losing $132,000 for every vehicle it sold during first quarter. They're saying that their electric vehicle division will lose them $5 billion this year alone because there is weak demand for electric vehicles. So what does this mean? Of course, they're not going to be producing those. I'm watching the parent company is called Stellantis. So with all of that, let's move forward. We've got also surging auto insurance. We've been speaking about this. Will be putting pressure also on drivers. They're already beginning to turn in their vehicles. We're at a peak with consumer debt. Starting with housing debt, they've got highest mortgages ever now with increased rates. We've got higher auto loans that are now being defaulted on because they cannot afford the higher vehicles cost. And then we've also got massive consumer credit card debt. So unsecured debt and the buy now, pay later. These are all converging. When these do, these are going to have that swing that would push from stagflation to a period of deflation. Now we're talking time out. This is months out from now, I think. Hopefully not until after the election. At that time, the physical US dollars you hold in your hand will have their value. You'll need those to pay. So during that deflationary phase, that would be followed, if history proves correct, the hyperinflationary, that would be when the other countries move off of the US dollar as a reserve currency. So, and that could be quite some time down the road. But looking into this a little deeper, we've got this quote. It sounds as if it would be the US. Directing liquidity towards oil industries, win-win gain. It would lead not only to self-sufficiency, but also create jobs along with profitability to benefit the people. So the shocker is, this quote is from Tehran. So Iran understanding this, getting into the global trade here more, we'll talk about that in a bit. This is in particular with oil, but they are moving other trades. We've got Turkey in talks with ExxonMobil over a multi-billion-dollar liquid natural gas deal. And we've got copper, of course. We've been talking about this surging to a 2-year high. So money has to move somewhere. It's moving into commodities, moving into Bitcoin, I expect soon, and other places. So that is a basically a narrative for prices to continue to rise. So let's move into wars. First, real wars. Yemen Houthi rebels, you'll hear about this. They downed a Reaper drone, apparently, posting footage of the wreckage. So that's emboldening them that they can and encouraging them to attack further. So moving on with ditching the dollar, I want to go into a little bit of what's going on. Half of all Russia to China payments and trade are conducted via third parties. It's also not being done in US dollars. So, with that, we've got little arguments going on still with the United States and China, the standoff over the US debt because it is unsustainable, and that is how we are exporting our inflation. So, with that, we've got Iran and Cuba establishing ties. They've now agreed to have sister ports, is what they're calling it, to facilitate trade directly between one another. So, with that, I also want to bring up this story long lines forming and frustration as Cubans run short of cash. So, this is exactly why I'm saying hold physical US dollars for a time when this happens, because it will happen in the United States as well. So, with this, got a couple of love updates. Just wanted to lighten this up a bit. We've got an amazing invention I would like to speak about first. A 360-degree treadmill. This is made by Disney's Imagineers, is what they call them. But basically, with the virtual reality, could make it look as if you are exploring any area in the world or all kinds of fantastic imagination things. So I just want to bring that up because I thought that was cool. I understand there's other implications to it. However, could be a lot of fun. One other thing that I would like to bring up is a part of being ready is growing your own medicine. And I do plan on getting into this, perhaps doing a little bit more to bring this up, of what natural remedies could be had so that you can start growing your own, namely mint, oregano, can start with those, very hearty. And with that, going to leave you with my favorite things because I wish you wonderful rest of your weekend. And until I see you again, my friends, stay free.